Hi, welcome to Coffee and Crypto. I'm Arun Singh, and I know you've had a rough last week as a crypto investor, so I thought a little dancing might help. But they're saying crypto winter is coming, and they're suggesting of a possible slump that we are to see in the coming future. But crypto winter, is it just a slump or there's more to it? We'll try to decode when we go to our coffee vault. Let's go. So last week, Bitcoin prices dropped to around $35,000, and that is 50% drop from its record high of $69,000 that it touched in November 2021. Crypto winter trended again and sent chills down the backs of investors. But what is it? What is crypto winter? So when crypto prices drop without any recovery in sight for over a long period, it is called a crypto winter. But why are people calling it crypto winter? Because of the graph that we are going to show you. We'll have a brief look at how top cryptos fared in the last week. And there you see a lot of red. You have Bitcoin, Ethereum, Cardano, Solana in red, and Tether was up by only 0.01%. But what has been the effect of this recent slump? It caused the failure of multiple ICOs, which is initial coin offerings. Second, it led big banks and companies to shelve or delay their crypto plans. And many were reminded of the late 2017 to early 2018 crypto winter when the price of the Bitcoin fell by 80% to a low of $3,100. Now let's also get experts' opinion on this. We have with us Rohas Nagpal, Chief Blockchain Architect at the Hi-Fi Blockchain. Ajit Khurana, crypto expert, founder, Genesis Network. A very warm welcome to both of you. To Mr. Nagpal first, should we get our crypto winter quotes out? Are we in crypto winter?
Yes, and as winter, every year it comes. So even last year we had crypto winter. Now this year we are having, every year we are going to have it. And yes, this year's winter is currently on.
Okay, and Mr. Khurana, what do you think? Are we in middle of crypto winter?
So we are being threatened with crypto winter, and frankly, unlike the complex array and matrix of factors which caused that in the past, right now it is being primarily driven by the action of the Federal Reserve. So that is it. As in, answer is yes or no, depending upon what Powell thinks.
Yeah, of course. A lot of experts are also pointing out the correlation of cryptocurrency with stock markets. So a lot of markets internationally have crashed or are seeing a slump. Mr. Nagpal, do you think that is to be blamed?
No, to be very honest, I think crypto is too immature to really look at such serious uses. I think it is basically the profit taking by the whales. So in the boom period, they have made huge profits. Now they need to actually book them. Otherwise, it's only on paper. And now that the profits are being booked, we are seeing this downturn. And very soon we are going to start seeing I don't think it's got anything to do with very serious issues like what's happening in the US.
Okay, and as you said, it's relatively new, but do you think as more players are entering, this will decrease the volatility in coming years?
Oh, I think it will increase the volatility.
Okay.
Absolutely. And in fact, crypto is going to do well as long as there is volatility, because that's when you have a chance to make big money. And of course, there is also the risk of losing big money, but I don't think volatility is going to go anywhere.
Mr. Khurana, do you agree with this?
Very interestingly, I agree with a lot of things that Rohas said in general, but today you are picking on all the things where my opinion is different. I believe that when the proportion of new people entering the space, let's say people who have done crypto for the first time in the last 12 months, becomes a much smaller fraction of the total number of people in crypto, which for example has happened in stock markets, etc., the volatility will decrease because the emotional reactions, while they will always be there, will be reduced.
Oh, so you are of the different opinion then. And is it safe to call crypto an inflation hedge, Mr. Khurana, seeing the trend?
At this point of time, its inherent characteristics do look like it could end up being an inflation hedge, especially instead of saying crypto, if I were to say Bitcoin, because all of them have different characteristics. However, the market experience so far has not shown so. Primarily because while there are inherent things which are different between stock currency and cryptocurrency, the fact is that one of the biggest drivers of crypto price movement is the liquidity in the market. And as long as that becomes the primary driver, it may not start becoming a crypto hedge, though I hope it will in the future.
Okay, but Mr. Nagpal, as you said, there isn't any direct relationship with the stock market, but a lot of experts internationally believe that, the US Federal Reserve's monetary tightening or regulation part of it, or the likely interest rate hike is leading to this slump that we are seeing. Do you agree with that at least, or do you think?
See, I mean, you look at a simple example like a meme coin like Dogecoin. Do you really think the people who are manipulating a Dogecoin price are going to get impacted by the Fed or interest rates? No. There's so much of speculation that happens in the crypto market that it's basically the movement by the whales which actually influences. Security and stock market on the other hand, because it has been there for such a long time, it's a lot more mature, and yes, solid logic can impact it. But I think in crypto, it's all about whale movement.
But Rohas, I think like Bitcoin has been there for a long time, and then there's ETFs as well. So
still very short time. Security market has been there for more than a century.
Okay.
Whereas crypto itself, Bitcoin was born barely 10 years ago. And the real magic of trading started off in somewhere 2017. So we are barely a four-year-old industry. So no, I don't think we have so much logic in crypto.
So we are in middle of crypto winter, but there's no ice age coming, right?
I hope not. I don't think so.
And
it'll bounce back soon.
What do you think, Mr. Khurana? I mean, are we into a deeper trouble?
Even if it is a deeper trouble, it is not an ice age, because ice age would mean like, death and destruction. How long the winter lasts is, not perfectly seasonal, but no. Just to give you an example, I have not sold, right? So that obviously tells you that I do not think that this is like an irreversible or a cataclysmic kind of fall.
Okay. Thank you so very much, both of you, for joining us for this conversation. And now we move ahead with our second segment, where we are decoding a term popular in crypto world, DAO. What is DAO and how is it linked to crypto? Let's start with the basics. DAO stands for Decentralized Autonomous Organization. Don't get confused. We'll talk about Decentralized Autonomous Organization. I mean, three of these words. So it's an organization run by code agreed upon the community which started it. Let's begin with D, which is decentralized. This means there is no bureaucracy or hierarchy. Second is A. It is absolutely autonomous because the rules of the community are embedded into the code. No managers are needed. Decisions are automated. Third is the O. It's an organization, which means members with same interest, motive, or passion have come together. But there are so many communities which are run by members, right? So how is this different? How is DAO different? Well, a DAO's transactions and rules are recorded on a blockchain. It gets extremely helpful in financial transactions. DAOs come together, launch Kickstarter initiatives with the help of cryptocurrencies that fund the project or even allow stakeholders to make important decisions. The entire mechanism eliminates any human error. And that brings us to talk about the advantages. And this is one of the advantages here. So number one is completely visible framework. Number two, there is no single person who is in charge of the community. Any DAO member can view any financial aspect of the firm without difficulty, making it publicly auditable. Now, changes to the code or protocol must be voted on in a transparent manner. Then DeFi, NFT, and other uses can all be built into the system. But there is one huge criticism for DAOs, which is the security vulnerabilities. And we'll also talk about this with our guests as well. With us, Ajit Tripathi, Head of Institutional Business, Aave. Aave is an open source and non-custodial protocol to earn interest on deposits and borrow assets. Amit Jain, co-founder Altius DAO. Altius DAO is a DAO for sports lover. A very warm welcome to both of you. Mr. Tripathi, to you first, as we were talking about criticism that usually DAOs face. One is, one of those is security vulnerabilities. Would you agree with that?
Yeah. In fact, some of the DAOs are very, insecure in the sense that, the most basic form of a DAO is a chat channel with a shared crypto wallet, right? Like a multi-sig wallet, which we call a Gnosis safe. So anything can be a DAO these days. So if you're trusting a bunch of other people with the ability to move money, then there is, and you don't even know who they are sometimes on the internet, then there is always going to be a security issue. So some DAOs are very well behaved, in terms of, for example, the Aave DAOs are actually very, very well known, well understood. There are lots of people looking at how who controls the keys, and there is, what the software looks like. Whereas some of the new DAOs just prop up and no one really, studies them or understands what the security issues are. So it's important to not treat all the DAOs the same way and really, see where and make sure, have the code is audited. And there are some people looking at the actual multi-sig structure.
Which are few use cases you can point out for us?
Yeah, so DAOs are everywhere these days, So I think the most common use case is obviously protocol DAOs like Aave, Uniswap, Maker, and so on, where people vote on code changes and risk parameter changes for DeFi protocols. Then the second most common use case is where people just pool money to buy something, right? Buy a stadium, buy a cricket team, buy a painting, buy some NFTs and invest. So investment DAOs are the second most common. The third are more social DAOs like, Friends with Benefits, Temple DAO, where people are on the internet. See, the key thing is with DAOs is that it's allowing people on the internet who can't normally, see each other or ever meet each other to coordinate on something. And that something is usually buying something. Yeah.
Okay. Mr. Jain, to you now. How can one make their own DAO?
Yeah. So all you need to make a DAO is a mission. Your mission should be path-breaking and should be involving because it's all about community. So involvement is important. So some mission by which you can attract a community. So second thing is community. So a relevant performing community because all are stakeholders. By its own nature, a DAO is actually inclusive in nature. So all these stakeholders are should be responsible for taking the vision ahead. So choosing your community, making your community is important. And the most important thing is obviously framework. Framework means governance rule, token economics, because this is the only thing which motivates people in long term. DAO is not a different entity. It works like a normal organization in a decentralized way. So you need a framework also.
Sure. Other than the examples Mr. Tripathi pointed, if you can also give us some use cases of DAOs, other than yours as well.
Yeah, so as for me, it's very early stage. So there are use cases, obviously there are use cases, but DAO can be done for anything which is right now happening. But whatever can be done in decentralized way can happen in DAO. So right now, yeah, as he said that a lot of applications are going on like buying a golf course, building community, some social DAOs are there. So we are building a sports DAO or Nautilus DAO, which is decentralizing the entire sports ecosystem. It's just not just a fan-based community. One more application which is coming up is gaming DAO. So we are seeing a lot of gaming DAOs in which card holders are member of a DAO, and these cards are acting like a token and accumulating value based on the popularity of
Sure. As Mr. Tripathi also said, almost everything in crypto world these days is DAO, and a lot of people say that Bitcoin was probably the first DAO as well. In the end, Mr. Tripathi, how is the marriage between DAO and metaverse really working out?
Yeah. So again, you have when you can't understand one buzzword, you should use two. So I think the thing about DAOs is you can coordinate on the internet with strangers, right? And that coordination involves money. That's the bottom line. And then sometimes things are less decentralized. Sometimes they are autonomous. Sometimes they are organized. But you often don't find all three in the same place. So in a metaverse, you can do really, really cool things like Amit described. I'm part of a gaming DAO called India Gaming Guild, and so it's allowing a lot of young people to create new and interesting crypto games. And they will essentially start buying applications for the metaverse. And metaverses are virtual worlds where we can do real world things, right? Like buying and selling, meeting people, dating, shopping. I mean, you're going to college, meditating. You could do just about anything in the virtual world. I mean, ultimately, Zoom is the most simple metaverse, right? Zoom with an avatar. So DAOs and metaverse go really well together because ultimately what you're doing is you're doing cool and interesting things with strangers on the internet. Things that actually involve money and coordination. So it's a really, really interesting idea, and you don't have to do it within your hometown. You don't have to do it within Bangalore, even within the same country. Okay. You don't have to start a country club in the neighborhood. You can do it on the internet with people from all over the world, and that's pretty cool. When you think about it.
Sure. Thank you so very much, both of you, for talking to us. And as Mr. Tripathi said, that lot of cool things are happening on the internet. After the break, we will be talking to a guest who is doing a cool NFT, and that is fart jars. She is selling her fart jars as NFTs. Don't go anywhere. Keep watching Coffee and Crypto. watching Coffee and Crypto. I'm Arun Singh, and a US-based reality star made $200,000 from selling her farts in mason jars as NFTs. Yes, you heard that right. She is popular on TikTok. She's participated in a reality TV show as well, although she got hospitalized as well for doing the fart business way too much. 31-year-old Stephanie Matto joins us for a conversation. Stephanie, a very warm welcome to NDTV. First, I want to know how it all started.
Hi there. So my fart jar NFT project started off with my fart jar story where I was bottling and selling my farts. I thought it was just a funny, cool direction to take my business in. I've always been interested in crypto and NFTs, so I wanted to dip my toes into this world and see if I could do it.
Right. So your fan used to buy it before as well, but now you just linked it to blockchain, right?
Exactly. I wanted to bring my fart jars from the physical world into the metaverse. And also I felt like it was a funny project. Sometimes, NFTs can feel so serious and intimidating for people. So I just wanted to make it lighthearted and funny. And, also the NFTs, there's 5,000 of them that you can mint, but 100 of them do come with special redeemable assets. So you could get some physical fart jars if you mint an NFT as well.
Yes, it has created the buzz you wanted to create with this, and I'm sure your TikTok followers are also buying it. By the way, she's very popular on TikTok for her fart diet as well. But Stephanie, how has the response been like?
It's been very successful. I'm pretty shocked. So within the first week of launch, we generated over $130,000. However, that was when Ethereum was still having its moment. It's a little different story today. I think we're all a little bit upset about that. But yeah, it was extremely successful, and I feel like it was a huge learning experience for me because I learned so much about the NFT community, and it kind of made me think like there's so many people who are interested in learning about NFTs that don't know anything, that feel intimidated. So I like that this is also a learning opportunity for other people to get to know about the concept of NFTs more.
And your potential buyers might be watching you here in India, and for them, I want to know, what is the price?
Yes, 0.05 Ethereum.
Okay. And is it available on OpenSea and your website, both the platforms, right?
Yes, it is.
Thank you so very much, Stephanie, for talking to us. With that, we've come to an end of this episode. I'm Arun Singh. It's goodbye from my side.